All right, hello, everyone. Happy Thursday. Welcome to your weekly market check-in here with myself. I'm Greta Wall. I am your host, and I'm joined by David Prince, the leader of T3 Live's Inner Circle virtual trading floor. David, happy Thursday. It's been a while because you've been busy trading this wild market, but I was able to pull him away for a little bit today to get some of his thoughts. So how's your day going so far, David?
My day is going well. Some frustrating
Right.
parts and some good parts, but I'm alive. All is well.
It seems to be how this market is these days. It's like every day is good and bad all
Yeah.
in one with how fast these moves are happening. All right, the title of our stream today is Navigating the Post-Fed Market. And so that's where we are. We are through the FOMC. The decision came out yesterday. The chairman's presser happened. What is your read on the Fed and how the market is feeling about the Fed at this point post-meeting?
Okay, so I don't want to make this confusing, but my personal opinion yesterday was he was not dovish. He was very non-committal, but he was better than what could have been. In other words, the primary fear was, with tariffs and inflation being a problem, and even though growth is slowing, he might still be worried about inflation first and foremost. And maybe we'll have less than 2 cuts in the dot plot. And the market, because it had gone down quite a bit, was willing to look at the glass as half full. I personally think if the Qs were closer to 520, 530, yesterday we would have been down. Had we not come into it with some corrective action, over the past few weeks. So on the surface, I saw it as very non-committal. And as a Fed chairman who said, it's out of my hands, I can't tell you the future. I can simply tell you, I'm prepared if inflation is a problem to hike rates or certainly wait for a longer period of time till I cut them. And I'm also prepared if the jobs market really slows and I see that the economy needs some help to cut rates quicker. But I am very non-committal. However, I said, but I see the price action. I see the bond market being friendly today, talking about yesterday, and the market wants to go higher. I'd like to add some risk. So for the day, let's add some risk. So we did it primarily through Qs and a few things, but mainly Qs. And I was willing to play, so to speak, but into 485, which was a key resistance area, I sold most on TQQ and QQQ. So my thoughts were, he split it right down the middle. The market wanted to make more of it than it was in the good side. And maybe today's reaction is a little bit more the reality. He's not particularly dovish. He wasn't particularly hawkish. And he truly admits he doesn't know where we go from here, which shouldn't exactly make the market too excited, right? When your Fed chairman tells you that. So I think data is everything, right? The coming data points, whether it be things like NFP, PPI, CPI, PCE, they're going to mean everything to the market.
Right as I unmute myself, my dogs start barking. Sorry.
No worries.
No, you know the struggle, David.
Yes. I can't make fun of you here.
I have 2 dachshunds and man, they can bark. All right. Trump today saying the Fed should be cutting rates to lessen the impact of his tariffs. Powell yesterday bringing back that word from the pandemic, transitory. We heard transitory come out of his mouth.
So I'm not an economist, right? And I don't pretend to be, but I always go into a Fed meeting and tell everyone what to look for. Like, if you hear this, then we do this. And if you don't hear this, then maybe we do this or we do nothing. And my primary kind of prep for everyone was, hey, I think he's going to be, I said this on Monday and Tuesday, I said, I think he's going to be a bit more dovish than the market thinks. And if he points to tariffs as something that's inflationary, but only momentarily, I didn't realize he would go so far as to say transitory again. But again, if he points to it as a short-term problem, not a long-term problem, then maybe the market will go higher. So transitory is what did it for us. And I was like, oh, it was like 479. So I said, all right, well, we'll own the Qs. But whether or not that comes back to haunt him is a whole nother thing. But that obviously is what opened the door for some of the bulls yesterday.
You would think after everything that happened
Yeah,
in
it was
2020
shocking. I mean,
to
it's all anyone.
2022, they would never have the word transitory in their vocabulary ever again.
Yeah,
Do you think the tension between Trump and the Fed and what Trump wants to do them to do, obviously, they're independent and they're not supposed to be impacted by what the president wants. Do you think that tension, though, could cause some uncertainty for the market?
no, because I think people come in knowing that Trump is vocal, loud, and it's going to scream, "You're a schmuck. You got to cut rates." Well, what are you doing?
Yeah.
And I think most grown-ups in the room believe that Powell's not going to listen to him, that he really believes in his job and what the rules are, which is that he is separate from our president. So in the grand scheme of things, no. Is it a little weird, time to time? Because we might even hear Trump say, we got to get rid of this guy. You never know what he's going to say. Sure, but I don't think it's market moving, because I think everyone knows where they stand. Like before Trump became president, I think we knew. And we knew that he would talk about cutting rates and such.
Yeah. And if we remember, Trump did nominate Powell. He did
Yeah.
put him in this position
But
originally.
he's also threatened his job before, or said maybe he shouldn't be. So I think people are used to it.
Yeah, totally. All right, let's talk about the market and what's been happening. It's been a busy March so far. 2 weeks in, we got a correction, we got a bounce. Well, what's your read on the environment we're sitting in right now?
Trader, like I always say, put your trader's cap on, keep it
Oh,
on.
yeah.
It is not really an investing market. When I say that, I simply mean that is valuation so extreme on the downside that there's a lot to invest in and dig in here long term. We're probably not there yet, right? S&P still trades far above its typical PE. Earnings season was at best subpar. Some people might say pretty bad. But occasionally here and there, there's a little bit more to invest in than there was a month ago. But it is a trader's market more than I've seen in about 2 years, right? Where they give you these little pockets to both go short and long, which, if you're an active trader, there's nothing wrong with that. So trader's market to know your levels, right? Qs yesterday when we were buying them, I said, listen, if we get to 485, that's clearly a spot to get out or sell most. Got to 485, I'm not even a chartist. I use them every day, but it's not my expertise. 485 and right back down, right? Today, same sort of thing. So it's just to know your levels. And on the downside, ultimately, whether it's SPY or Qs, I don't think the lows are in. We might go higher and wear off some oversold conditions, but I wouldn't be shocked to see, say 13, 14% on SPY and closer to like 16 to 20% on NASDAQ Qs. I think I was talking about this on Spaces with my buddy Jake, or it was somewhere. But the bottom line is, if you go back to the pullback in August of 24 during a wonderful bull market where all was fine, it was just an everyday correction, but a real correction for the first time, it was 16%. We haven't even gotten there yet. People are, because we've seen such extreme downside momentum in some hot stocks that are down way more than the indices. A lot of people think this is a massive correction because you have stocks like Reddit cut in half. But on the indices themselves, this is like kind of par for the course. It's nothing special. So to break it down, if we are the same sort of correction, 16% on the Qs, that brings us to 454 from recent highs. So I wouldn't be shocked if after wearing off the oversold condition, we make another low.
An interesting phenomenon I noticed.
Uh-oh, you're freezing. Can you hear me?
Much lower, even with the Qs up. Do you think that's indicative of the action spreading more outside of those Mag 7 stocks and being more dispersed across the broader market?
Say the beginning part, because it froze, so I didn't hear what you said in the beginning.
Oh, sorry. When the Qs had the big bounce the other day, but Mag 7 was weak.
Yeah.
Is that indicative to you that the market is definitely broadened out more at this point, or no?
I think it's more indicative that Mag 7 lacks leadership and earnings were less than fantastic for many of that group. I really think it's more about that than anything. It's, hey, we had earnings and Microsoft, not very special. Alphabet, not particularly special. Apple, fine, but not particularly special. So No, I think it's, hey, this group, everything is not going perfectly as it has been for so long. They're seeing slowing growth rates, and perhaps they just aren't the leadership they used to be. Less than it's broadening out. Yes. And then you could say, and countries like Germany have bull markets, and China's been fantastic. But more than anything, I think these companies are not quite the same sound fundamental companies. Do they earn lots of cash? Are they better than 95% of what's out there? Sure. But are they bulletproof like they've been for 2 years? No. That story has gone by the wayside. Maybe it's not even really valuation, because some of them are getting cheap, like a Alphabet trading under 20 times earnings, but earnings just weren't fantastic this quarter across the board.
All right. The big news of the week, obviously, was the Fed meeting yesterday, but an ongoing story for the market this week is Nvidia's GTC AI conference, still going on, started Monday, lasts till tomorrow, Friday. Jensen's keynote was on Tuesday, midday. It was like 1 p.m. Eastern time. What was your takeaway from the keynote and how the market was feeling about that keynote?
I'll just tell you what I told in a circle. And what I said was, they are so far ahead of everyone. They are a wonderful company. They have created just a massive moat, and they're so far ahead, and they're making advancements we never dreamed of. Okay, now that we know all that, there's nothing here that we haven't spoken about already, that we are not aware he was going to chat about. There are no game-changing moments during this presentation or keynote, and therefore the market's lack of response. I said, but don't get me wrong. I'm not saying it's not a great company. I'm not saying it's not earning tons of money. I'm not saying they're killing all the competitors, but there is nothing here that drives the narrative to be any different than it was yesterday, because everything they're talking about, to some degree, we've chatted about before. So thus, lack of reaction. At some point, will it get too cheap based on earnings, or based on the fact that they're so far ahead of everyone? Perhaps. But as far as the event moving the stock, I said the difference is there was just no meat on the bone beyond the meat we already know existed prior to today. So that was my take. All went fantastic. Just nothing different than what we expected.
All right. As you have been trading this choppy environment for sure. When you're trading the Qs, you've mostly been trading TQQ, which is a leveraged ETF. It's a triple. The T is triple. Why have you been choosing that vehicle instead of just buying the Qs straight up?
Oh, that's a really easy one. Because the inner circle's grown really big. And for the funds, right, and people that manage large books, the Qs are easy, where I focus for 95% of my career. For your average retail trader that maybe is managing a 7-figure under account, TQQ is much more accessible, right? They don't have to put half their account into the Qs. So to be really frank, I wanted to make it more accessible because I'm pretty decent with the Qs, and I get pretty aggressive at times, and it offers us alpha. I said, let me do the TQQ so it's not out of anyone's realm. And yeah, some people will play options like calls when I do the Qs. They don't feel like going out and buying a $500 instrument, but so they didn't have to just do calls, because calls don't always work in this short-term environment. So let me do TQQ, and that way it is available to everyone. And that's why.
All right. Well, TQQ definitely performs differently than just the Qs, obviously. So since you've been trading it much more actively than I've really ever seen you trade a fund like that, what have you noticed about managing a position in something like that versus managing in equities and managing the Qs themselves?
I'm cognizant of the leverage because, it works both ways. So nothing different. Here's the only different thing is when I go out and buy 3,000-4,000 Qs, I know what I'm doing. I know what I can make or lose. You can't do the same with TQQ because it's a $60 instrument versus $500. So actually, if anything, it's that you have to own enough of it for it to be profitable, because you have to manage your numbers differently, right? For TQQ to make the same sort of money you're used to with QQQ, if you go out and buy, say, 3,000 Qs, right, and they move 3 points, well, you make some real money. You can make $9,000 really quickly. But you can't just go out and buy 3,000 TQQ and think it's going to be the same amount of money, because the percent may be leveraged 3 times, but the instrument itself will only go up like $1 for every $3 in Qs. So it's actually being cognitive that you have to change your position sizing and think of it in dollars more than shares, if you follow me. So basically I have to be more sized in TQQ for it to work for me.
All right, makes sense. A question from Twitter. You mentioned 127 for Nvidia. What's the near time frame for that target?
I want to just correct you. I said if it gets through the 21-day, like the whole premise, not you, but for this fellow, the whole premise is it's got to get through the 21-day. So if it got through the 21-day and held, I think it could happen in a couple of weeks, super quickly. I'm just taking a look here. But if it's not through the 21-day, it means nothing. So 21-day is right at 120. You can see we topped there, but you can see the trend line. Like, yeah, the minute we get over there, it could be like a 3-day move to 127 very quickly. But you're going to need a friendly market, and you need it to close over 120.
All right. Your Cava trade this week, the name is, looking for an update. We're up 5% again today. Talk about what you did with Cava this week. It's definitely a great trade for you in the room.
So I love garlic hummus, right?
I love Cava. It is good.
It is good. So it's just a favorite of mine that I've always said, listen, it's never going to be cheap. I'm not saying the stock can't go down when the market corrects. It wouldn't go down forever. The market corrected. It's finally coming in, but it is never going to be cheap. It's never going to be like, wow, they're growing 50%. And they only traded 30 times earnings. In my firm opinion, that is not going to happen because there are too many eyes on it, because it sticks out and fast casual as just the premier growth property that a lot of people hope is the next Chipotle. Whether that happens or not, who knows? They're far away from being that quality yet. But because of that, because of the proven method they already have, and because of how early they are in the game, meaning they're not in every state, they're not in Europe, they're not overseas, this is the beginning of a much bigger growth story in a lot of our opinions, certainly mine. And if you go there and you see how efficient it's run, and you see their catering, and you actually try the food, you kind of start to drink the Kool-Aid. God knows I am. So you start to realize, where is it just buyable? And I look back and I said, wow, if this stock ever has a real correction, where could I buy it? And I saw a level at 72. So being that in order to make money in this market, if you're exact, especially on a long-term swing, you miss everything, right? So I saw Cava 76 earlier this week, and I said, I got to own it. I said, we have now pulled back more than 50% off highs, something like 60, it was 60 some odd percent. Premier property. I don't think it's going away, and I think it's a must own because I don't think it's ever going to get cheap. And if it goes lower, I'll buy more. So I bought some 76s, and the market bounced. Partially, I got lucky. I'm not going to pretend I'm some genius. It's been a tremendous win for us this week, and the stock has rallied almost 10 points from where we bought it, which in this market, it's like a 15% move overnight. It's been a big win for us. So I did trim a decent amount, because in this market to make 15% in a stock, remember, it's not an option. That's a large move. So I took some off, but I'll be long-term and we'll be holding it for a long time to come, and I'll buy dips. Love premier property, expensive. You have to be willing to pay for their growth. And I'm not saying it's for everyone. Some people will look at it and say the metrics don't make sense. It's grossly overvalued to me. I've seen grossly overvalued, and I've seen it remain overvalued. And I'm the schmuck who's like, I'm not buying it because it's overvalued, and miss the next 400%. So I've chosen with Cava to admit I've seen that happen to me too many times. I need to own it, and thus I own it.
All right. I want to get your opinion on Tesla because obviously Tesla is the Trump trade still with Musk in Doge and all of the things. Dan Ives out with a really bullish report on Tesla, but obviously we know he loves Tesla. No surprise from him, but he is the Tesla guy.
For him, it was almost cautious, just out of fairness.
Okay.
It was him saying, as bullish as I am the company, if Elon Musk doesn't change his tune, it's a seminal moment, right? If he doesn't wake up and pay more attention to Tesla than Doge, it could be a problem. which is a little different for him because he's a rah-rah guy. I'm not saying I don't like him. He's friendly, and I think he's great, very bright. But he's a rah-rah guy, right? He's not one to be bearish. Today was a little different. It was constructive, like, listen, this is your moment. This could define the company and its history moving forward. You better shape up or it could be an issue. So it was a bit more realistic. Not that he's not bullish, but he's saying Elon Musk has to come to terms with time and where he focuses, because he's saying it's a big issue right now.
Definitely. And then after that report this morning, Tesla recalls nearly all of their Cybertrucks because the trim won't stay on the truck.
Yeah, but bottom line, so many people are used to, it'll just be software. That's not really a recall, as we understand.
Right.
One, it's an actual recall. I just want to point that out because so many Teslarians, whatever the hell you call those people, they're always like, software, there's no such thing. I get it. This time it is actually a recall, right? Because you can't fix this with software. Now, is it relevant to their company? No. How many Cybertrucks have they sold versus, Model Y and X and all, Z, W, all those. But I'm making up cars, obviously. But my point is, it's a small number, but it matters. Here's what I think, though. I think that when you see some boneheaded politician who was almost the vice president of the United States, and this is not politics, because if I was a Democrat or Republican or a purple person, I would say, this is asinine. He got on yesterday and basically laughed about how poorly the stock's doing. I don't know if he's aware that I believe the Minnesota Pension Fund, I was told, has over 1 million shares. This dumb idiot. I mean, could you imagine that? So, but anyway, I digress. The point is, when you get schmucks like this coming out, and then on the flip side, when you have the Commerce Secretary, Mr. Lutnick, coming out and saying you should buy Tesla, that in itself is a little weird too. Blurred lines, right? I think that they're generally moments that mean you should be buying, not selling. They're so intense, and this is all so insane. And the fact that where I am presently, which is not my typical Florida, New York, I'm in a smaller town presently, and it's not. And in this smaller town, my wife tells me about an Uber delivery person who was caught on video peeing on his customer's Tesla. He was taking food to the customer, and prior to doing so, he decided to urinate on their Tesla. And I thought, this is all so insane, but perhaps more a signal to buy than sell. Now, is it cheap? No. Do you have to believe in the future and robots? Yes. Do I think this is bottom? No. I think bottom is probably ultimately going to be closer to 200 or 180. But do I think we're closer to a short-term trade here? Yes. So I actually bought some Tesla today. Or I bought the Ultra, the TSLO. But ultimately, it's all totally nuts and more a sign of a coming bottom than maybe a lot more downside. It's just really totally nuts, the whole situation. It's sad.
The last distraction for Musk from Tesla that shareholders were all, up in arms about was the purchase of Twitter. And everyone, he bought it for 44 billion, and then everyone said it wasn't worth that anymore. And then yesterday it is worth 44 billion again.
Most importantly, it is up 400% from its last valuation. Right? Where people are taking losses. Listen, you can bet again.
We can say Musk is distracted with Doge. Not dumb. Like, he's not stupid.
No. I mean, listen, I know, right? Like in investment banking and primarily in VC, I have a basic model. It's not, I'm an expert in fuel cells, or I'm an expert in biotech. It's, God, if I can back the smartest men in the world and they will allow me to give them money, I'm going to do that because it really works. So I'm going to find the best jockeys out there. And sometimes they'll be like, you're a nobody, David. I'm taking money from Goldman. And sometimes we'll give them more, leeway than a Goldman Sachs will. The point was, it's a model that works. Well, I mean, right now is a moment where it's less about Tesla, more betting on the jockey. A lot worse jockeys you can bet on than Elon Musk. So at some point in time, I got to think it's pretty viable. Is this the bottom long term? Probably not. Probably a bit lower. But is there a trade coming? I would imagine. And yes, he's one of the foremost people that have ever walked this earth. when it comes to business. I mean, how many, amazing discoveries and success stories does one guy have? Not many like him. And I'm not even a fanboy. It's just the facts. He's a remarkable human being, and I like to back remarkable human beings. So I'm more of a buyer here than a seller.
All right. So long term, Tesla still like a long term investment.
Let's face it. I think what's cool about Tesla, I just want to be real about this. It could go down 20, 25% here. It really can, especially if the Qs have the sort of pullback I think they might have, and we're closer to 450. But the difference is it has the type of alpha, can also then move up another 200% from that correction. There are not a lot of stocks that are comfortable being down 20 or 30% to say it's still going to be a viable investment. Do I suggest people go out and try and lose 30% to make? No. But Tesla is that type of stock. So is it definitely more palatable here as an investment to me? Yes. And it was too easy before, right? It was so Trump-esque. Just buy it, it'll go up. Well, that could only last so long. That's not fundamental. That's narrative.
All right. This is a bit of a question, a little broad here, so you might not be able to. But what are your thoughts if the market tops? Do you think tariffs, recession sets in, and a 20% drop in the market like 2007? What are your thoughts on?
I think of 2007 as where we topped, and then 2008. So if you're referring to like great financial crisis type stuff, I don't think we're remotely close to anything like that. Not even like in the same ballpark. But if you're asking me, can the market go down 20%? I've been pretty loud on X, Twitter, whatever you want to call it, Spaces, and certainly in Inner Circle that I do expect. And by the way, like in writing on December 28th, I expect a 20% correction at some point this year. Yeah, I think that's very doable, and more because we just had the longest bull market in history. That valuations by many metrics were higher than we've ever had in history. That the amount of pullbacks or corrections we've had within that bull market were very minimal compared to history. That the S&P is expensive compared to history. That earnings season was subpar. That maybe there's going to be a digestion period in AI, which is our leading growth story. I'm kind of stealing a little bit from Mr. Dan Niles, but he's right that when you do make this big purchase, all these purchases, you want to see some ROI, or at least just something that says I can keep spending the same amount of money. And maybe there's a digestion period that causes some of these stocks to flatten out or go lower. So for a multitude of those reasons, then you throw in tariffs, then you throw in a president who's front and center, loud, right, and headline based, and why couldn't we go down 20%? By the way, it wouldn't be the end of the world. It would be more an opportunity than anything. And just to backtrack, I was going over recently with you like 20 minutes ago how in August of 24 we pulled back 16%, and that was during a bull market, and then we ripped to new highs. So 20%, yeah, easily possible.
All right, we're coming up on Friday. Last Friday was the third Friday in a row, right? Third one in a row. We got a nice big rally into the weekend.
We had two. I think it was third. Yeah.
Yeah, I think it was 3 in a row. It was last Friday. Do we get 4 in a row tomorrow? Is it possible?
You know how I always tell you where stock closes before?
Yeah. So where's with the market where it's at?
So if the Qs are close to 484, 485, I'm going to go with no.
Yeah.
Well, they close here or lower. Yeah, I definitely could see some upside action tomorrow. Do I feel strongly on that? No. There's ideas I feel strongly on, like Meta. I felt strongly on today, and I went and got long. That's more gambling stuff. But I'll tell you what I've done with the Qs. I got flat today when we went green. TQQ, I'm down to a trailer when we were up, and I took profits in some Cava, Unity. Sold some something else. What the hell did I sell here? I can't even remember. But I bought some Meta calls and I sold all those. So for me, it's been more of a day to take profits. I will be a dip buyer, but tomorrow's like guesswork. We can keep bouncing towards 485. That's the big number. I'm not sure if we can get through. And we don't have any big numbers tomorrow, do we? We just have options.
No. Yeah, tomorrow. Yeah, no economic data scheduled tomorrow.
Yeah. There's something there. Micron reports this evening.
Micron.
and it's, let's just say the redheaded stepchild that really had an awful quarter last quarter and poor guidance. It has bounced 20% off a bottom, and it is a tough print. But if Micron can give us some good news and help semis rally, is it relevant like, say, Broadcom is or Nvidia is? No, of course not. But is it relevant and is less expected out of it? Yes. So if it can impress, that can help semis, and that is the engine to NASDAQ. So that could be helpful. And then we have Nike reporting, and no one's expecting much there, and that certainly could help retail. So numbers tonight will be relevant to tomorrow. Is it like Nvidia reporting? No, but they're two important companies that can really dictate the action in two large sectors tomorrow, retail and semis.
Yeah, and we're definitely at the end here of earnings season, so not a lot happening.
Yeah.
So people are paying attention, I think, to those two numbers. Question, 20% down on the SPX, does that take us to the 4,800 to 5K range? Or
Lionel, I don't even look at SPX. I trade SPY. But I just do the math. When I have time later, I'll do the math, and you can message me. I'm really looking for the correction to occur more in the Qs and NASDAQ than the S&P. I think S&P be closer to 15%.
Okay. Okay. I'll let you go in just a second, but what are, you say you were focused on Meta. There are things you have really strong conviction about. What are the ideas you're focused on, the levels for those ideas, etc.?
Sure. I am full-blown long again and very aggressive buyer if the Qs get anywhere near 455 to 440. That's a wide range, but I love wide ranges because it allows me to add. I will be a bull again. I've been very neutral to bearish. I am very aware of 485 as a breakout area. If we get above there on the Qs, there's room to go test the 200-day, which is above 490. And I'll trade, the TQQ and QQQ because of it pretty actively. I've been pretty much on the long side. Moving on to stocks, huge fan of Cava, so I don't have to go over that with you again. Immunome is dirt cheap. 0.72 recently took a huge stake in their secondary. Stock went up 50% from the secondary, but after the markets pulled back, it's pulled back. There are not many companies where you can literally buy a company under $1 billion market cap. The CEO sold his last company for $43 billion to Pfizer. He's been buying stock. He bought it as high as 13 recently. He bought some at like 775, and they have readouts coming this year. And he's literally building the same thing. Clay's building the same thing he did at Seagen. He's building one of the most important ADC portfolios there is, which is the key to a lot of our success with cancer. So that's a no-brainer to me. I love Hood. I love what this guy's done. I never dreamed he would take such market share and be such a winner. Robinhood is a rock star business. That last quarter was awesome. I own stock. I own it below here. If it ever pulls back below 40 and anywhere between 30 and 35, it's going to be one of my largest positions. I'm a huge fan. I don't want to get too long-winded, but there are some of my favorites. Moving on, in terms of indices, it's really like I had a buddy today. He said, "You like IWM?" I said, "I just no. There's just not much to be positive there." Would I like to say I like XBI? Sure, but I can buy a few stocks underneath where I have an edge. I know the management team. I know how much cash they have, and I think it can produce 200 or 300% gains. So why am I going to guess on XBI? So that's the way I'm looking there. In terms of underneath the hood, other ideas, when it comes to Mag 7, Meta was just a no-brainer. It was the only stock left over the 200-day. They are certainly less affected by tariffs. Someone's going to say, well, if there's tariffs and there's a slowdown, don't they get hurt by advertising? Yes, everyone eventually gets hurt, but they are certainly hurt a lot less. Did they have one of the best quarters in Mag 7 during the last round of earnings? Absolutely, but everything's based on price. So I focused there today. I had some calls that went up huge, so I sold it. The point is, will I buy that on dips anywhere near the 200-day going forward? Yes. Amazon earlier in the week at 192. I said, there's a really special spot at 188. You got to be long. So I actually missed that one, but a lot of the chat bought Amazon at 192. Anywhere 192 to 188 area, I really like Amazon. in terms of what my Mag 7 preference is. If Apple ever fills the rest of this move down, it's got to be ways near 200. I'd be interested in Apple again. Anyway, those are some ideas. I just want to point one out. So we are going to get a CoreWeave IPO, and everyone's going to talk about AI again, and everyone's going to talk about power again, and everyone's going to be talking about Core Scientific, which has been murdered, like stabbed, shot, and someone sat on it. At some point, you don't want to forget about CORZ, which will be a main benefactor as everyone gets excited for this CoreWeave IPO.
I think that is the most ideas you've ever given me on a live stream. That was good stuff, David. Lots for people
to
write down.
I wanted to throw out what I was looking at. Yeah. You're frozen. Can you hear me?
30 minutes.
Oh.
I can hear you. Sorry, I think I'm having some internet issues. I have to call my people to get them to come fix it. But all right, I'll let you go. If you guys want to get David's free ebook, he has a brand new free ebook teaching you his top.
Oh, I gotta say something. Can I say one thing? I don't like to avoid the ugly. So I have one ugly idea today, right? Baidu was probably our biggest winner of the week, right? Got pretty aggressive.
Yes.
On
we didn't talk about it, but
it ran on Monday. We didn't even talk about the good or the bad, and it was just a home run for us. Calls went up like 200%. When the stock got to 105, I got flat, and I said, all right, when it pulls back, I'm going to look at a higher call strike. Well, we have, and it looks like I added right as we're having a bit of a correction. And I want to point out the way these Chinese stocks, I have some time with my calls, so I'm going to be patient. They're not weeklies, they're for next month. But my point is, people are probably aware, if you're not, the action in China today, it's sticky to the downside. And maybe this is the beginning of a little bit more of a correction. By the way, it's been straight up, so it's bound to happen. This might be the beginning of a bit more. I'm just looking at the action in Baba and Baidu and FXI today. They've gone straight up. Maybe we're going to have a bit more of a pullback. So I thought I'd point that out. Now I'm done.
All right. Angela asked real quick, what was the biotech you mentioned? And that was Immuno.
Immuno.
Right.
Sorry for this, but idiot, Mary, Nancy, Mary.
IMNM. Is the ticker there. Immuno. And for anyone, everyone on Twitter and such, this is recorded. And so if you want to rewind and listen to David's ideas again, if you missed something, you can. All right, now I'm going to let you go. If you want to get David's free ebook, you can go to t3live.com/DP. The screenshot from the room, I think it was last week, but sick day, thanks for the game plan. Quoting you, saying some of the most vicious rallies happen in bear markets. And we're not necessarily in a bear market. We are in a correcting market, and we have definitely seen some of those vicious rallies, especially on Fridays lately. So we'll see what happens tomorrow. David, have a great rest of your day, great end of your week. Everyone else, good luck out there in the markets. Again, go to t3live.com/DP to get David's free ebook. Learn his 5 steps to grow your trading account, all for free. All right, see you later, David. Have a great day.
Bye.